The National Investor's motto is, you can get information anywhere, but here you get knowledge. And for well over 40 years now, Chris Temple has imparted that knowledge, an unparalleled, understandable, and useful take on the big picture of the markets and of our world. He has been out in front of what you see on the news every day on many themes. More, Chris has taken this macro knowledge and his unique analytical abilities to uncover unique investment opportunities. Often, he has guided his members to big winners in resources, biotech stocks, and more. His talents and connections often getting him into ground floor opportunities before they are discovered. Without further ado, here is Chris with today's topic.
Welcome in. I'm Chris Temple, editor and publisher of The National Investor, and I'm joined today by a good friend of many years, Scott Melbye. Scott is the executive vice president of Uranium Energy Corporation. You see them here on the screen, and he is the president of Uranium Royalty Corporation, which, if you didn't know, is the first and I think still only company that uses the model that a lot of companies have used for precious metals and base metals, but now to buy royalties in uranium projects. Scott, welcome. I'm glad you could join me.
Chris, it's great to be on your program. A lot of exciting things happening in nuclear energy and uranium, so very timely.
Well, there are, and you and I have known one another for a lot of years, and for the majority of that time, it was sometimes crying in our beer, and sometimes wringing our hands, and sometimes, oh, we're getting close. And finally, in the last couple of years, especially, what we knew was coming is finally arriving. We've got a bear market in uranium and in nuclear energy for an awful lot of different reasons. And today we're going to get into some of the high points of that. Before we do that, folks, real quick, also on the screen here, I want to put the slides for each Uranium Energy Corporation and Uranium Royalty on the screen. Scott and or myself, even though today's discussion is going to be just a broad industry overview, we may make what might be considered forward-looking statements, and so you need to be aware of that. And as I have pointed out, this will be one of two videos that Scott and I are doing. This will be on the broad industry themes, and then we will also have a discussion specifically on Uranium Energy Corporation, which you'll also see on our channel along with this one. Now, Scott, before we get going, you know, there's an awful lot of things that have gone on in the world in the recent past. We've got this move toward green energy, all different kinds of things. And one of the reasons being, and I like to point this out to people, whether we're talking about nuclear power, whether we're talking about electric vehicles, whether we're talking about fossil fuels, whatever, one constant remains. It's that wherever we get the power from in the world for all of our different daily needs, those insatiable demands for power just don't go down. They go up all the time. And as we'll talk about in the US, for example, when it comes to nuclear energy specifically, we get 20% roughly of our power grid fed by nuclear power, and without really, for a long time now, anything approaching the domestic production of uranium to meet those needs, although that is finally going to be starting to change, and we'll get to that in just a second. But one of the cool things about this industry, Scott, as you know, is that this sector, and I think the uranium story specifically, is really one that has got its own dynamics independent of the markets. UEC, for example, when I got people into that near the bottom back when, you know, we're up 4 or 5 times from the bottom. It's probably going to get a whole lot better than that, in my opinion, down the road. And I think at times it hasn't mattered what the overall market is doing because of the supply and demand factors, which we'll be talking about, I should say. But anyway, give us, you know, you've been, as I've said many times, one of my go-to guys in the industry. You're one of the handful of people on this planet who has the experience and the knowledge of this industry. So give us a walk through in your own way how we went from good days for nuclear energy, you know, back when, to the Fukushima disaster in 2011 and a lot of years in the wilderness, and now how all of a sudden all the stars are aligning once again for nuclear energy.
Yeah, well, Chris, definitely. And this August marked my 40th year in the uranium industry and nuclear energy. So I've really had the privilege to be in this industry through all of these cycles and seeing the ups and downs. And certainly, the last bull market where investors recall that quite fondly, and the conditions that were present back then. We see a lot of similar things happening today, but I think the fundamentals are even stronger today. In fact, I think the fundamentals in the uranium investment thesis is stronger today than at any point in my 40-year career. But yeah, the Fukushima events did set us back. It had profound impacts on both supply and demand. But now, as we sit 12 years after Fukushima, we have really a confluence of three factors. You mentioned the transition to green energy. Globally, we've been hurtling towards this green energy transition, and frankly, it hasn't gone very well. And the reason being is governments and policies have focused too much on ideology and not enough on math and science. And there's nothing more math and science than nuclear power, but it really comes down to the fact that wind and solar, that are intermittent sources of energy, run at best 25 to 30% of the time. Nuclear power is as clean and carbon-free as wind and solar, but it runs 24/7. And I think this realization from both the left and the right, from environmentalists and industrialists, public opinion turning favorable towards nuclear power, has really changed the picture for nuclear. If you just looked at the supply and demand fundamentals that you would measure any commodity by, production, inventories, demand, we're at a structural deficit today, at a point when demand is now taking off again, and we are producing uranium at a rate 50 to 60 million pounds a year less than what we're consuming. That was fine when we had lots of inventories that built up after Fukushima, and we had the production cutbacks and discipline, which really didn't kick in until 2016, 2017. But boy, did it have an impact on drawing down those secondary supplies, and that was needed. If that wasn't enough, we then had the speculative interest come in from companies like Yellowcake PLC out of London, or Sprott Physical Uranium Trust, or even companies like UEC and URC buying uranium, just basically putting that on the balance sheet, recognizing that if you could buy uranium at $20, $30, $40 a pound, which is well below the global production cost, why wouldn't you do that? Well, that had the impact of basically clearing out all the excess inventories from the market. So as we sit today, I know it sounds like a bold statement, but we've transitioned from an inventory-driven, oversupplied market to now a production-driven market again. And we haven't been in that situation for a long time. But now the market is going to be determined by, the marginal pound that's going to supply the spot market going forward is likely going to be a produced pound. And that depends on cost of production, availability of supplies, permitting, licensing, all the things that would kind of drive a normal commodity. And so it's not surprising that many in the industry right now are talking about a supply squeeze, a very severe supply shock, if you want, in the uranium market in 2024, 25, and 26. So there's going to be a lot of attention to companies that are going to be able to either restart mines or start up new operations that are fully permitted to be able to meet that gap. And unlike copper, gold, or silver, where there's usually mines waiting in the wings to be restarted to kind of temper any sort of price increases, uranium doesn't have that kind of slack in the system. So could get very interesting. I know URC and UEC are well positioned to take advantage of that, but it's a very exciting thesis right now for uranium and resource investors.
Well, you and I have talked for a long time about what we had for a number of years. You have a lot of active nuclear power plants in the world, and they were trying as best as they could to milk that weak post-Fukushima market as much as they could. It was kind of a game of chicken. They were trying to see if they could get some of those existing inventories from a Cameco, from whoever, on the cheap, and that game is over. And all of a sudden it's like, holy cow, we don't have X number of years of uranium accounted for going forward. Now we're going to have to start dickering. The spot price, which doesn't really reflect, of course, folks, the contract price at times. We've gone from $17 and some change a pound at the low to now we're getting back up around 60 again. And even that number, Scott, correct me if I'm wrong, is really the bottom of what it's going to take to get a lot of production restarted because of the higher cost today.
Yeah, we're not immune to inflationary pressures in uranium. You've seen capex blowups in other commodities with new
Yeah.
mines being built. So a real premium will be placed on operators that have existing infrastructure. But you're right, prices approaching $60 a pound will incentivize only the best and most competitive mines around the world. Obviously, mines like Cigar Lake, McArthur River in Canada have restarted and ramping up to full production again. UEC has stated that with $60 or higher prices in the spot market, we'll be restarting in Wyoming at Irigaray and Christensen Ranch. But most mines out there probably need $70, $80 incentive price to get going. So we could have the price run quite significantly and not see the production response. We'll see it eventually, but I think you'll see a lag before that really can kick in meaningful ways. Certainly, we're not in an efficient market, as I said, like some of the other commodities, and that is a bad thing. When we're in an oversupplied market, we tend to see uranium prices well below what the sort of equilibrium market clearing price for uranium should be, that an economist might tell us what the market should clear at. But when we go into undersupply, as we are now, the trading price in the spot market could go way beyond what is sort of the logical equilibrium market clearing price.
Well, and I think a lot of people that did make those early moves into buying physical uranium, including UEC, did it for exactly that reason, realizing that this squeeze is coming. It's evident now, but it's going to get worse. And we'll talk more about that, of course, as we go on. But you mentioned earlier that whether it's left or right, the political imperative has really coalesced around this. A lot of stuff, as you said, accurately so, has not gone well with the green energy transition. We have an administration in this country, in my opinion, that has done a lot of harm to the mix of things. We need to be getting more copper and nickel and cobalt and uranium and a lot of things. And there's been a lot of roadblocks there. Frankly, for uranium, it's been less bad than with everything else, as we'll discuss.
Mhm.
But I love to point out when the global environmental scold, Greta Thunberg, is saying, you know what, maybe nuclear energy is better than Germany strip mining for coal again and all the rest of this stuff, when she's on board, and Bill Gates, and I think majorities pretty much of both major political parties in Washington, that uranium's time has come. But before we get to the U.S. specifically, because I want to focus a bit, Scott, on the security issues here, the need for the U.S. yesterday to become more uranium independent, et cetera. Globally, we're seeing one country after the other, save, I think, with the sole exception still being Germany. Everybody is re-embracing nuclear power again. Sweden this week was the latest one to come out.
Yeah, they're clearly after Fukushima. There were countries, even countries that were heavily committed to nuclear power, like Korea, South Korea, France, said, well, maybe France's 75% reliance on nuclear power was too high. And so there were discussions in a political arena of whether that should be dialed back. Other countries like Sweden, I mean, they've had a policy for much of my career that said they will phase out nuclear power when available, reliable, affordable sources of energy can replace it. Well, it's been 30, 40 years of that policy. And here we are. Sweden has revised its energy policy to say not 100% renewable, but 100% non-fossil fuel. So it's a wide open door to nuclear power. And the energy minister of Sweden said that they'll likely need to increase their nuclear generation by a factor of 10. That's just one example. I mean, Korea's full speed ahead again. France is building reactors. Belgium, Netherlands, all around the world, like you said, with the exception of Germany, are recommitting themselves to nuclear power. I think we have today 435 reactors in over 30 countries now, producing 10% of the world's electricity, but a full quarter of our carbon-free energy. We have 67 reactors, very large reactors that have come online around the world in the last 10 years and another 60 that are under construction. And this is all before the next wave of small modular and advanced reactors, which we can go into in more detail. So the demand curve for uranium, had been, we were anticipating a 3-4% growth in annual growth in uranium requirements. I think the World Nuclear Association report that'll come out next month in London will have that closer to 5 to 6% annual growth. And there's scenarios that are very reasonable that would indicate it should be higher than that. So it's a very interesting gap. We have a 50 million pound gap between production and consumption. Consumption's going up. Mines, will come on, but it'll be a slow response, and the inventories are now gone. So not surprising, uranium prices are up 20% year to date, full 90% up from the last 2 years. And I think we're only in the first inning of what is a very exciting bull market.
Well, I couldn't agree more. And as a matter of fact, I might repeat this again at the end, but from an investment standpoint, folks, I've often made the case, and a lot of these commodities are cyclical, and investor interest in commodities over time have been cyclical. Talking about the gold space, I've often made the comment that when generalist investors from time to time think that maybe it is a good idea to join the gold bugs and invest in gold and gold stocks, it's like a 300-pound man jumping into a kiddie-sized wading pool. When it comes to the generalist investors starting to wake up to nuclear energy and uranium and stuff like that, this is like an elephant jumping in to a kiddie-sized wading pool. We've seen the first fruits of this, I think, already in the last couple of years or so, with nice returns on all the uranium equities by and large, at least the major ones. But I don't think that's anything compared to what we're going to see. Now, I'd be remiss if I didn't point out, folks, that along with these interviews that we're doing with Scott on the industry and on Uranium Energy Corporation, we're going to be putting out around Labor Day timeframe a special issue that's kind of a follow-up to my new FANGs one from earlier this year. And of course, the new FANGs, the N in the new FANGs stands for nuclear energy. But we're going to put one out specifically on uranium where we're going to go into a lot more detail. So make sure that you ask me for that. Here's our contact information on the screen. The world over, Scott, as you pointed out, people are embracing nuclear energy. Emerging market nations led by China have got aggressive game plans to build new reactors. They're going to be customers for uranium and so forth going forward. But here in the U.S., we have an interesting situation. This country was the first to have a civil nuclear energy industry. We gave up our leading position in the world over a period of time to where we're now very dependent on imported uranium, even from Russia and Kazakhstan and others. Belatedly, this country is starting to understand that we should not be in that position. So it's interesting that when 20% of our energy needs in the U.S. Firing our power grid come from nuclear energy, that we have produced essentially nil uranium for some time. Now, that has started to change, and I think the genesis of that was during the Trump administration under Secretary Perry at the Department of Energy. They adopted an all-of-the-above strategy for our energy needs, and they opened the door to what we're seeing right now. So speak first, if you would, to how we're going to be meeting our needs more domestically going forward via the Strategic Uranium Reserve, and where augmented steps are going to be to that.
Yeah, well, in my role as president of the Uranium Producers of America, I couldn't be more optimistic about not just UEC's ability to mine in Wyoming and Texas, but the whole domestic industry. I think will be one of the biggest beneficiaries of these market moves, and the realization of the energy security is national security. And nothing will remind you of that more than the Russian invasion of Ukraine. And as you said, 20% of our electricity comes from nuclear. 50% of the uranium for that 20% comes from Kazakhstan, Uzbekistan, and Russia. We banned Russian coal, gas, and oil in the weeks following the invasion, but we continue to take nuclear fuel from Russia. Why? Because our dirty little secret is we're that dependent on it. Not just the uranium, but the conversion and enrichment. Those components are about 20 to 25%. But there is a concerted effort in Congress. And again, it is, as you mentioned, very bipartisan. I can make the rounds on Capitol Hill, and whether I'm going into a Democrat or a Republican office, the reception is the same. And I've never felt that in 40 years, and it's very exciting. But there is pretty much unanimous consent. We need to ban Russian uranium, but there is a strong movement that we don't want to ban Russian uranium if it has the unintended consequence of impacting some of our nuclear power plants. So the companion to that has been the Nuclear Fuel Security Act, provisions that have been championed in the Senate by Senators Barrasso and Manchin to revitalize our domestic fuel cycle in the US and essentially expand the strategic uranium reserve, of which our company was successful in being part of earlier this year, but expanding that from just a natural uranium reserve to an enriched uranium reserve that would also stimulate conversion and enrichment production in the United States again. That bill made its way into the National Defense Appropriations Act that was passed the Senate in the hours before Congress left for the August recess. So when they come back in September, we hope the House takes up that NDAA bill and adopts the Senate version or passes similar legislation that would move that into law or move it to the president's desk for signature. But it really is a recognition that, and I'm not saying all of our needs have to come from the United States, but we can't be reliant on supplies of uranium from places like China, Russia, Kazakhstan. They also in China and Russia realize that they can't be reliant on supplies of fuel from that are controlled by the UK, US, and European Union. So we have a bifurcated world right now. And what's interesting is the world's largest producer, Kazakhstan, I'm pretty sure if the world splits in two in that regard, they fall into the China and Russia camp with the large borders they share with those countries and the very significant investments that they have in that country. So, we talk about Russian sanctions and everything else, but I think we need to look at Kazakhstan and say, okay, half of their production is controlled by Russia as it is, and Russia has increased their influence there in recent months, and China has been buying up and entering into joint ventures and signing very large contracts with the Kazakhs and establishing a trading hub on the Chinese side of the Alashanko-Kazakh border that is a way for more uranium from Kazakhstan to be funneled into China and less to the west. Obviously, it's been very hard to get uranium out of Kazakhstan with Port of St. Petersburg falling under sanctions, under global shipping sanctions, and they've had to find alternate routes out through the Black Sea, through Georgia, Armenia, Azerbaijan. So we have some really big things that are happening here, but more uranium conversion enrichment for the West is going to have to come from countries like Canada, the United States, Western Europe, and Australia. So really presents an interesting driver for North American suppliers, where our company is really focused. But my other hat that I wear, Uranium Royalty, we're quite active looking at companies around the world that can help fill this gap and be up and running and cash flowing in this cycle. We're going to need probably 8 to 10 new mines coming online around the world. That's even with the Kazakhs producing at full capacity, even if much of it's going to Russia and China. It assumes that Cameco will be producing at full capacity from their mines, but we need 8 to 10 additional mines in all these Western countries to really step up and get into production by 2030. We have visibility to a number of those, but there's others that aren't going to come on quickly. They're big capital lifts. They still have permitting and licensing issues. We saw one challenge that was presented in the last month with the coup in Niger in West Central Africa,
right,
where there are new mines being proposed in that country, which many expect are some of the earlier movers in this next cycle, which are now kind of up in the air with the political strife and the coup that's gone on in that country. So uranium from stable jurisdictions, I think will carry a premium both from investors and with consumers of uranium.
Well, and I think importantly too, and I've been speaking and writing about a lot about this in a broader sense in the recent past, but you look at this resource nationalism that's breaking out. It's in conjunction with the move away from globalization. It's in conjunction with the balance of power in the world shifting. We're moving away from the day that the U.S. was the global hegemon and called the shots to now we're going to have two, three, four different kings of the hill, depending on what part of the world and what countries and blocks you're talking about. And that underscores, folks, the fact, and it's not just uranium, it's copper. We could talk about a lot of different things. We do not have in our hemisphere and in our own backyard anywhere near the sufficient and stable supplies. And from an investment standpoint, what's important about that is that you can think that we're going to have eventually a doozy of a recession. But you know what happens during recessions globally to overall energy demand? At worst, it flatlines during a recession because you still need power, you still need fuel, you still need to travel, and
Yeah.
so I think people don't realize that when sometimes you see, as we have in the recent past, because of China's weakness, these knee-jerk reactions of people selling off different commodities. This, as Scott pointed out, where uranium is concerned, is very much a lack of supply. For years, there has been underinvestment, underdevelopment in uranium and everything. And now we're going to be paying a piper, but the people in the catbird seat, the UECs, the uranium royalties, and a lot of other companies out there, they'll be benefiting from this. Before we get to close, Scott, you mentioned this earlier, and I think this is another important thing for the average investor who maybe is just starting to warm back up to the nuclear energy space, but has some lingering questions about safety and whatnot. I think it's important that people understand the distinction between the Fukushima Daiichi facility, which was a dinosaur when it melted down, and what we have today, from companies like NuScale Power, one of my recommendations, which is an elite on this, but then, Bill Gates's TerraPower is very well known, even though they've still got some hoops to jump through. But we've got totally new technology today in the terms of small modular reactors and the like that are really going to help fuel this renewed uptake for nuclear power. Just tell us real quick how those things work and why they're so relevant.
Yeah, well, I mean, it's important to note that the existing fleet of nuclear power plants and nuclear energy over the past 50, 60 years has been the safest form of energy in terms of injuries or deaths from energy sources. So it's comparable to wind and solar in that regard. And Fukushima, as bad as a disaster that was, there was no one killed or injured from radiation from that. So, the existing fleet, has learned lessons from each one of these events and made improvements. But you mentioned the small modular advanced reactors movement. This will revolutionize not just nuclear power, but energy going forward. And we're now beginning to see the first wave of these plants, the first of a kind units, being built and deployed for operation between now and 2030. These are not the 1,600 megawatt, huge reactors that we're used to. They're the 50, 100, 200 megawatt, smaller, built in factory, shipped on site, energy plants, green energy plants. They're not unlike the reactors in submarines and aircraft carriers. If they've been operating safely under the ocean in all sorts of conditions since the 1950s safely, I think we can deploy these on land, both on-grid, off-grid applications. They can be used for process heat and electricity. They're being used in conjunction with petrochemical facilities, mining facilities, crypto mining, data centers, desalination of water. The applications are enormous. And so you mentioned companies like X Energy, TerraPower, NuScale, GE Hitachi, Rolls-Royce. They're all deploying these first-of-a-kind plants with, I think, a heavy amount of support for the first-of-a-kind units from the Department of Energy, from the Canadian government, from the UK government. It's understandable that the first units are going to be the biggest lift. But if they can be built, and they are being built now in Wyoming, Idaho, Texas, Ontario, Canada, the UK, and if these are built on time, on budget, I've talked to the CEOs of these companies. They have thousands of orders in the period of 2030 to 2040. These could be deployed like gas turbines in terms of ease of construction and and impact on energy, green energy supplies. So that demand is not really factored in yet. In the World Nuclear Association report on supply and demand that comes out next month, you'll begin to see that demand being addressed as kind of a separate category, and it kind of gives you a range of what that might look at like. But I think by the next report in 2 years' time, you're going to start to see that those uranium requirements materialize into the reports, and they're not that that growth rate in uranium requirements that we've been talking about. That's really from the existing and new large reactors being built. Small modular is a whole new market for uranium going forward, and very, very exciting.
And that's really going to blow out this whole supply shortfall going forward, as you point out, in the years ahead. Folks, I can't stress it enough. I've said for the last few years now that there's probably not a better supply and demand setup of any single commodity in the world other than uranium. You've learned some of the reasons why for that today. Make sure you get in this pool before all of the elephants jump in. Because again, there's been some nice moves in the last 2 years, give or take, in the uranium equities, the uranium price. But that's nothing, in my view, from compared to what's coming. So, Scott, I appreciate your time today. Great overview. And again, folks, I can't praise Scott enough. I've known him for a long time. He's one of the best experts in the world in this industry, and I'm glad to know him. I'm glad that our members are going along for the ride with UEC and with other investments as well. And speaking of UEC, of course, look for our companion video to this, where Scott and I go specifically into UEC and why it is now the leading pure play uranium company in the US. So remember that our uranium centric special issue is going to be out shortly. If you want to be on the list, you're not already on my mailing list, make sure that you contact me. Here's the information again. Make sure you keep up with my updates on UEC and on the industry as well. Exciting times, as Scott said, and I've heard it from him. I've heard it from Tim Gitzel at Cameco. I've heard it from others that none of these men and women in the industry have ever seen a bullish setup in their careers like we have today. And it really will pay you, I believe, to investigate being part of that and having it as part of your portfolio. Scott, thanks much. We'll be back with you shortly.
Great. Thanks, Chris. Take care.
For much more of the National Investor's cutting-edge content and actionable investment opportunities, make sure to subscribe to Chris's free content at nationalinvestor.com. And don't forget to like this video and subscribe to this channel too. Thanks for tuning in, and we'll see you next time.